For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Let's talk about using that NASDAQ Scalper trading plan. First things first, I'm going to pull up the copy of the plan for Tuesday, May 10th, and let's take a look at what we had. You see here on the trading plan that we've got a short side setup in Apple, $93.13 down to $92.92, $92.92 down to $92.70, and $92.70 down to $92.50. These levels are going to be most helpful right around the open, maybe for the first hour of trading. And our first task is to have a look just before the market opens and see where the stock is likely going to open for trading. The way we do this, of course, is to look at the tape and see what's happening pre-market. And we can see here that the stock is most likely going to open up around $93.30. And that then our best indication for a short sale at the open will be 93.13, right? If it falls down, it's going to hit 93.13, and then we're looking initially for that move from 93.13 down to 92.92. And then if it pops up above 92.92 and we're watching it, we're going to want another move from 92.92 down through 92.70. And then same thing, if we get taken out at 92.70, we'd be looking for a 92.70 entry with a 92.50 target. So again, when I'm trading Scalper, I always want my entries to happen from the opposite direction of the trade. So in other words, in this case, if 93.13 is an entry, I want the price to hit 93.13 from above. And the same holds true for all the rest of these levels. And during the day, what I'd like to see is a bounce and then a move back down through, so that inverted check mark that you hear me talking about all the time really applies to any one of these levels. Here is what the pre-market order on this would look like. We've got a 93.13 stop, a 93.13 limit. That means we want that price, right? We're going to get in. As soon as it ticks 93.13, our order is going to go live, and the worst fill we're going to take is 93.13. That's because Apple has a very, very tight spread on the open, and you have a very good chance of getting filled with zero slippage, so why would you take any slippage? I have got a stop loss in this case right at $93.20. Could go up to $93.23 if you want to just do a 10-cent stop. $92.92 is our target. We've got a 21-cent target on this, and let's take a look at what happened once the stock opened for trading. Here we see that a 93.39 or so open led to a move right down through 93.13. This was a fully automated trade. It took me out at 92.92. And then you had the opportunity in the second 5-minute bar of the day to capitalize on what I call this inverted check mark, right? It's just a move back up, a bounce off that level that takes you down through, and in this case hits 92.70. And if you've got that bracketed, it's going to take you out there. And you don't have another entry opportunity until you get up here. Right, so once we get this push up above this line that comes back down through, we've got an opportunity for a 92.70 entry, and then in that case we capture the move down to 92.50. First hour is when these are going to be the most reliable. Then later in the session, going into the closing bell, you can look at them again and see how well they're holding up. In this case, we see that the range is really tightened going into the end of the day, and as a matter of fact, there probably won't be any setups for tomorrow based on the fact that these zones up in here are all less than 20 cents, and you really don't want to fool with it if you have less than 20 cents worth of profit potential. That's just one example of how to use the Scalper trading plan to capitalize on some of that opening momentum. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.